Hello everybody and welcome to Highland Group Financial's 10-step investment checklist. This is a checklist to help investors become more knowledgeable on investments that may be suitable for them and also help them ask the right questions when looking at an investment. So let's begin. So this is basically the intro. The 10-step investment checklist is, again, to ask the right questions in order to make qualified decisions. We all know that investing can be scary. Everyone hears of the stories. I myself was a victim of that. That was the reason behind making this checklist. I actually have an aviation background, and checklists were vitally important so that you didn't miss anything out. I felt this was a really key strategy on helping people cover all of their bases before making a decision. So step one, what percentage of your assets should be committed to one investment? Specifically, we're doing real estate. So that is a difficult question to ask right off the bat because everybody's at different positions in their life. What I would say in regards to this is that it depends on what your goals are, your current and future goals, financial needs are. Also, what part of what part of your life, if you're looking for income or growth, if this is going to be within or without an RSP. So this is a kind of a loaded question, but you need to decide on what allocations are right for you, and I can certainly help you out with that. So if you want some questions on what percentages of your investments should be in what, please email me at my email address, which I'll give you after this, and we can speak about that. Are institutional or pension funds or large allocations involved in the investment? This is a great question to ask. The reason being, pension funds, institutional investors often do their homework. They're going to do their homework because they've got millions and hundreds of millions of dollars of people's life savings and retirement money involved in an investment. So if they're looking at an investment that you're looking at the same investment, chances are they've had their lawyers, their accountants do a lot of homework on that product. Doesn't mean that you should do yours, but it's a good indication it's a good stable investment for you to take a real serious look at. Is there an offering memorandum or a prospectus? So in case you don't know what an offering memorandum is, it's really the insides of the investment, the financials, what the investment's about, how you're going to make your profit. It's very important to read through these offering memorandums to make sure that you know exactly what the investment's about. If you need help with that, you can either go to an accountant or a lawyer or an investment representative like myself who can assist you in looking through them. Where's your capital really going? Now, this is an important step, one that I learned the hard way. If you invest in something and they're telling you a story about the investment, obviously you like that investment because you are in agreement with where that money is going to make a profit for you. Oftentimes, investments take that money and put it somewhere else. So you need to make sure that you ask questions saying, if I invest in this LP, limited partnership, or REIT, or MIC, or whatever it is that money going to anything else but what I've invested in? Are there clauses in there saying that they can potentially move money into a different project? You do not want that. You want to have your money going to exactly what you said you were going to have your money going into. On the bottom here is usually in an offer memorandum, the funds and assets of the partnership should now be commingled with the funds or assets of any other person, including those of the general partner. I always look for that clause in there to make sure that the funds will stay in that project. What's the firm's business model? This is a real big one. You know, what are the objectives of the firm? Do they manufacture and sell products, or do they just sell products? I'm a huge believer in the fact that you can't be a manufacturer and a seller of products. If you do both, an investment representative may be very skewed to sell one thing rather than the other. It could be monetary reasons, or it could be pressure from the manufacturer who is also employing the investment rep. So what I like as a model is to have an investment firm that picks and chooses investments through a strict premium screening process and then recommends that to the investor. That way they can make an unbiased third-party recommendation to the investors. I think that's very important and something that a lot of the banks, unfortunately, they do that. What's the investment's track record? I mean, very simple. The numbers obviously don't lie. If it's an income product, I mean, how long are they making those distributions for? What's the average distribution been? Have they ever suspended distributions? I mean, oftentimes During the recession of 2009, there have been some suspension of distributions. Real estate should be a good barrier against that and create that steady income. So if there were stoppages for an income-producing REIT or MIC, there should be a reason why. So those are questions you would want to ask. Step 7, funds coming in, distributions going out. Okay, so how much of this investment is return of capital? They might have an advertising of a great rate of return, 12-14% rate of return, but they might not tell you that part of that money that you're getting back is your own money. Is the investment that you're putting in being created, what you're investing, creating additional interest, not return of capital, not like an annuity? So those are questions you need to ask as well. So, monthly distributions, part of the funds invested. So, pretty straightforward, but that's definitely a question you should be asking. How is the investment taxed? This could be different for everybody. One of the key advantages of a REIT is that a lot of it is considered capital gains, or return of capital, meaning that you don't have to pay tax on the investment further down the road. The depreciation of the buildings, they can flow through to the investors, which is a definite tax savings. Something like a bond is completely interest income, so that means that that's going to go on your income as what you made for that year. So if you've got two investments and one's showing a higher rate of return and one is a REIT, after taxes, depending on your tax bracket, it may be more attractive to look at something with more tax benefits. So that's something you should talk to your accountant with, and definitely look up those two terms, interest income and capital gains. Liquidity, how important is it to you? People do have a misconception if they invest in real estate, their money is trapped for 5, 10, 15 years. That isn't always the case. It is in some cases with limited partnerships. Obviously, they're using your money to make more money for it. So there's going to be a time of illiquidity. But some of these REITs are so large that they do offer liquidity. So you do have the benefit of both worlds, where you can invest in a real estate investment trust that offers good passive income, but a 30-day liquidity. So there are investments out there that do offer the best of both worlds, which I can certainly introduce to you in the future. And step 10, very important, is your investment representative asking the right questions. I feel in order to determine on what's a good investment for you is to ask you about your investment history, your investment, presently where you're at, where you want to be, what's going to suit your lifestyle now or in the future. Do you have kids? Are you working? What age are you? What time do you plan on retiring? There's so many different questions that an investment representative needs to ask to get a really good picture of where you're at, where you want to go, so that they can recommend a suitable investment for you. If someone's going to ask you 2 or 3 questions and then ram an investment down your throat, they're really not interested in your needs. They just want to sell you an investment. So, it's a probing process, and it might seem a little awkward at first. But if someone's asking you questions, they're interested in learning about you so they can make the best decision for you. If you want this investment checklist, please email me below at done@HighlandFinancialGroup.com, and I will email you this 10 investment checklist for you to go through in detail. And if you have any further questions or would like to set an appointment with me, please email me as well. Thank you very much, and I will talk to you shortly. Bye-bye.